Well, shares on course for their worst weekly performance since June. Risk appetite depressed by the looming US fiscal cliff and a warning from Germany that growth will slow into next year. But better than forecast Chinese data gives some cause for optimism. This is Market Pulse. Well, let's start with some of the big equity movers of the day. Crédit Agricole shares down more than 6%, the top banking sector decliner. The French bank paying the price for its Greek exit with a €2.85 billion quarterly loss. Shares in Commerzbank, Deutsche Bank and ING also among the top losers. British Airways owner IAG, though, bucking the downward trend. Its shares up after announcing it's cutting 4,500 jobs at Iberia to restore profitability as the group heads for a full-year operating loss. Well, commodities, the focus of today's chart zone. Gold hitting a 3-week high, on track for its first weekly gain in 4. The appeal of bullion boosted by worries about US fiscal woes. Talk too that demand for gold is growing at Japanese asset managers, while consumption in China has also hit record levels. Strong technical resistance into 1740, weighing on the rise though, with producers also seen fading the rally. Now in FX, the euro dropping to a 2-month low against the dollar, and I'm joined now by Adam Myers, Senior FX Strategist at Crédit Agricole CIB. Adam, thanks very much indeed for joining us. So as I said, euro at a 2-month low against the dollar, but the list of risks for the euro, and I've only got so long, but Greece, Spain, German growth, and now Germany's Schäuble asking the wise men for a report on France. How low can the euro go?
Well, I think it can go quite a bit lower before the end of the year. In fact, I wouldn't be so surprised to see it breach 125. As you mentioned, there's quite a significant long list of risks. The interesting thing is, though, that many of those on your list were there before this latest fall in the euro. So I'm not really sure why the market is so surprised. I think actually if you look beneath what's really happening in a lot of the price action across the market, but particularly with euro, it's that I think markets are really becoming impatient with this OMT plan, with some of the measures that were announced by Mario Draghi all the way back at the beginning of July, and some of that impatience is really starting to creep in at the end of the year.
OK, so they're waiting for Draghi and perhaps more importantly Spain. But dollar against a 2-month high against the Swissy. With the fiscal cliff looming, you would have thought that we'd be all running for the hills and into the Swissy. Why not?
Absolutely. You would have thought there'd be definitely reserve recycling going on, and that being seen through dollar Swiss, but of course through a lot of Swiss crosses as the Swiss National Bank pumped all those newly purchased foreign currency back out into the market. That doesn't appear to be the case, and it's quite curious. We'll be looking forward to seeing those new reserve numbers from the Swiss National Bank just to see how quickly the pressure has returned, or as is evident in dollar Swiss, is lacking at the moment. Very intriguing.
And finally then, a dollar against 3-week low against the Japanese yen. Now I've lost all consensus of what's going on. The Japanese trying to weaken the yen, but it's not happening.
No, it's definitely not happening. There was way too much optimism in the market going into the BOJ meeting now 2 weeks ago, and that really pushed dollar yen back into some uncertain territory. Then, of course, we had more uncertain news, and even with the US elections coming through with what is at least providing some certainty to the market, there's no question risk aversion is back. You've only got to look at the gold market, as you mentioned. The equity market's obviously falling quite heavily, and that is playing back into strong yen demand, irrespective of what the BOJ does.
So you don't buy the dollar specifically. What do?
Well, if you don't buy the dollar specifically, you should be eyeing gold. I think the risk at the moment between now and the end of Christmas is that we get quite a significant squeeze. Positioning was very much against gold, and as we see uncertainty continue over the next couple of weeks until the trading really starts to slow down in the 2nd and 3rd week of December, gold could squeeze significantly higher. OK, Adam, thank you very much indeed for that. Adam Myers there. Now, finally, in the deal zone today, mining group Lonmin has rejected a takeover proposal from Xstrata. Instead, it's pushing ahead with an $817 million cash call to repair its battered balance sheet. Xstrata, which already holds a 25% stake in Lonmin, says it's concerned the business doesn't have the management capabilities to ensure a sustainable future. Well, I'll leave you with our pick of the day, a series of images from Reuters photographers of demonstrations in Greece against the latest round of austerity measures being voted on by the government. I'm Nigel Stevenson. This is Reuters.